Hey there, welcome everybody. Christopher Inks with Texas West Capital, coming to you just a few minutes after 11 a.m. Central Standard Time here on a very cold, at least the rain has stopped, Friday morning here. What is this, February 12th, 2021? San Antonio, Texas, really getting some weird weather, guys. Uh, if you follow me on Twitter, you know I posted something about it there. Let's put it this way. The chance of snow this far south Texas is a very, very rare thing. Now, I'm not sure it'll even get here, but they're projecting possibly 1 to 2 inches. And you go, pop, 1 to 2 inches. Yeah, well, again, that's a decades type thing when that finally happens. So kind of crazy, but in the grand scheme of things, the reality of it is, guys, if you're not paying attention, and most of retail isn't, I still get very emotional, ridiculous comments. But the reality of it is, there's social unrest going on throughout the world here over the last year and a half or so. We've got the pandemic thing going on. We've got government coups going on, Myanmar and stuff like that. We've got the financial markets, which are just completely out of touch, completely euphoric. Well, retail is anyway. But you've also got your bigger players jumping in, and something that you may not be aware of if you're not, if you haven't been trading for a while, or haven't learned this, is that at major cycle tops, what you'll get, usually we talk about the difference between retail and the large professional traders. But often what happens when you get to these major cycle tops is that everybody's all in. And that's why they become major tops. It's why the correction is so much greater than what it normally is, because everybody gets in at the extremes. Your retail, your pros, your institutions, everybody. So yeah, there's a lot going on there. So I want to talk a little bit about that today here, guys, as well. But hey, if you haven't joined us yet, make sure you do here at howtotradetowin.com. We'd love to have you guys joining in. Guys, I hope the guy's almost done fixing up the. We've got a right now. Discord doesn't play well with other payment services and whatnot when you try to integrate website access. So I've got a programmer right now working on automated Discord access. So until that gets done, which hopefully will be done here in a few days, we have to add you in manually. So just know that if you do join, usually we're pretty quick on it, but especially if it's later at night, it might take a little bit to get you on there, but we'll get you on there. But yeah, man, Tier 3 is the place to be. If you guys don't know, starting today, we're going to start adding, right now it's going to be weekly crypto indexes. So we're going to add for our Tier 3 members, we're going to have, your shitcoin index, your alt index, your mid-cap index. What else are we going to have? Your exchange coins index. Let me see here. You might, if you're Tier 3, you'll have noticed that the channels are showing up now. Your alt perp, DeFi perp, exchange perp, mid perp, and shit perp. And so we're going to start with that as a weekly here over this first couple of weeks. And then I'm going to try and get that into a 2 or 3 times a week update as we kind of get smoothed in there. Because, it's more we have to do in it. So I just want to make sure we can do it. But yeah, we're just going to include that there for Tier 3. So that'll kind of help you guys, if you're looking at, okay, well, where do I start looking for coins maybe to trade in? You can kind of look at those indexes and see which indexes are outperforming the other ones. And those are the ones you want to be in. So you go and you say, oh, well, your altcoin or your DeFi, let's say, DeFi is outperforming the other indexes. Right now it's not. But if it were, you go, okay, well, let me look at the DeFi coins and find the ones in there to get involved in. Or you look at one that's maybe an index that's about to break out. Let you know that you should be looking to get into something because the whole thing's going to go up. Or even that it's topping out, so that you know that maybe you should be getting out of something that you're in. So anyway, we're going to be doing that. And that's just, again, another thing that we're adding. I told you over this first Q1 and Q2 of this year, we're going to be adding a lot more things for Tier 3 in there. So kind of make it an all-inclusive informational place for you guys. So anyway, but yeah, join us here. We'd love to have you there, guys. Our people are pretty amazing. If you don't know, many of them are sitting in here in the chat right now. They're pretty great people. I love that we're able to get to meet everybody from around the world. It's pretty awesome. Let's see here. Ray is here. What's going on? Ross Mark checking in. Chris Day is here. Scott's here. Who else is here? Nevlusian. Data. Let me see here. White R21. What's up, man? Crypto Mowgli checking in. What's up, buddy? Let's see here. Martin's here. Sean Adair's here. Spiral Architect. What's going on, guys? So, as I mentioned, let's just kind of jump over here real quick to what we've done here. If you follow me, by the way, you can follow me here at TX West Capital, guys. There's some things you need to understand, and most of retail does not understand. See, this is why. Remember, retail tends to buy the top and sell the bottoms. Why? Because they see stuff like this, and they go, oh my gosh, everybody's excited about it, so now I need to get in. Stuff like this, even if you are not a multi-year trading veteran, even if you've only been in crypto since, say, well, I guess it'd be multi-year, if it's from 2017 there, you should be noting a lot of the similarities between what's going on now and what was going on in Q4 of 2017. So some of these things we have, again, you have retail going crazy here. You got all these silly little TikTok things going on, trying to emotionally get you into, Bitcoin and stocks and all these other things. I posted some before. The Joe Exotic one, it wasn't him, but it was whatever her name was, the other woman that was all part of that whole thing. She was promoting, I think she called it Dogecoin on TikTok. These are signs. Guys, you get people that aren't normally involved in this stuff all of a sudden out there getting involved. All of a sudden telling you you're stupid for not being involved or you need to get in today. This is where you need to start paying attention. Now, you're going to get responses, unfortunately, when you notice stuff like this. Let me see here. Where was that comment here? I had one. Let me see. You could say it won't end well every day and eventually it'll be true. This is typical retail thinking right here, guys. This is the emotional attachment to the market, the bullish emotional attachment to the market. It's a clear a clear non-understanding, not even misunderstanding, but non-understanding of what's going on in the markets, okay? But this is why retail generally buys the top and sells the bottom. They get excited about stuff like this. They're like, oh my God, everybody's doing, I got to get in now, right? You guys maybe know this personally from when you were trading, right? When you first came in, maybe you got in at the top of 2017 and then, had to suck wind there for 3 years, right? So this, should be a warning. Now, this does not mean that it happens tomorrow or today, guys. What this means is this is more of, hey, listen, we're at a topish area. Now, price can jump up further than that, especially with the acceleration that we have with Bitcoin often, and go up quite a bit more. But remember, your topmost and your lowmost points there are just events. Your top and your bottom are ranges. Now, is this even a top range? I don't know yet. But I'm going to tell you what, if you're not paying attention to what's going on here and taking it seriously, that there's some silliness going on that clearly defines this bullish euphoria that's going across all the markets, you're really not paying attention. And there's really nothing I can do to help you guys. I'll sit here and I'll keep talking about it and I'll explain why, but until you accept what's being said, you're going to sit there and argue and maybe, joke and make fun and stuff like that of me or other people. But, again, it doesn't bother my bottom line, your response. I'm trying to help you pay attention. So we get this. What else do we have? We have this right here. Pally over here, he's if you don't follow him, you should. He's got good stuff here. He's partner at Anderson Kill, which is a law firm there. But he says, it's amazing to me that celebs still tout tokens without disclosing payment for the tout and their reps don't warn them. When was the last time we saw this, guys? We saw this with the ICO stuff back in 2017, at the end of 2017. And you saw these celebrities going out there and pushing stuff and into 2018 there and pushing stuff and not even recognizing that there were these laws and things that they have to follow. If you're getting paid to push something like that, you've got to disclose that kind of stuff. But now we get everybody coming out here, right? All of a sudden, everybody, Soulja Boy and all these other people coming out of the woodwork all of a sudden, right? Again, guys, people who wouldn't normally be involved in the markets are all of a sudden being the big names of the markets, right? And you guys are getting all excited about it. And emotion, the emotional run for a bit, and price will run up with it for a bit. As long as that aggregate emotion is enough to overcome the supply that's coming in, it'll keep pushing up. The problem is you can't keep that euphoria going. You never can. And if the market's being pushed up because of the euphoria there, then you get things like we got in 2017, or even that we got in 2019, June of 2019, those drops, or going all the way back, to 2014. But you get those strong responses back because once that euphoria fades, there's nothing that, it's just sitting there and supply pierces through it. You've got real supply coming in, and next thing you know, the market, reverses on you, and people are still buying at that top. So, you guys, you got to pay attention that you're not those people. People in general tend to speak about things of which they do not understand, right? You guys know somebody that does that, right? Or I'm sure you've probably done it at some point, right? I think we all have at some point. But the thing is, social media creates echo chambers. And it allows people to do that to even greater extents because they start to believe their own nonsense. One of the biggest things you can do as a trader, guys, is to recognize that you don't know much about the market. And the minute you start believing you know what's going to go on and you really feel confident, you're determined and you're basically guaranteeing to yourself what's going to happen, man, you should be, at that point, you should be all out of the market. Do not let yourself get to that point. And if you do get to that point, get the heck out because you're not thinking rationally anymore. You're thinking emotionally. So, you want to take care of these things. But going back here to the weather as well. Again, a lot of what I do is based off of what Prechter has termed socioeconomic theory, right? I didn't have a name for it. 25 years of doing this, I just came to the same conclusions. But we'll use his theory, his name for it. And so socioeconomic theory is just basically the great collective. How are people really feeling about the world, about their local situation, about the global situation, all these things. And so what we see over the past year and a half now, social unrest everywhere. We're seeing, look at the presidential election here just recently. Look at the market euphoria, where it's just completely emotional. No, it doesn't make any real sense. Again, the indicators that we look to see what stress is on the market are well beyond where they were at the dot-com bubble, well beyond where they were at the great financial crisis, well beyond where they were in the stock market crash of 87. I think it was Black Monday. And so all these things we look at are these extremes have gone beyond those levels. And people want to say, oh, it's just a new paradigm. Everybody says that. It's always that. It never is. It never is, guys. So we do all that, and then we look at the weather and go, man, the weather's crazy even. Weather done lost its mind here in Texas, right? I mean, the idea that we're looking at this in San Antonio out of all places, or even the thought that there's going to be any type of precipitation cold enough down here in Eagle Pass, that you're going to get this, even less than an inch accumulation. It's still snowfall. It's just crazy stuff, guys. We're very, we're getting close toward, the low end of Texas here, which is, if you look on a map, it's pretty low down. So what I want to say about this is, people, guys, you got to think we're organic, right? So we're carbon-based. People like when I say that. So we are not immune from, gravitational pulls and all this other stuff that's going on, in the world, on the planet here, as well as the pulls between the different planets and whatnot. And so this, I guess what I'm saying here is this weather here could be more of a physical representation of what's going on with all these things. And that could be, again, affecting human beings in the way that we feel about things and the way things are going. This is just a physical representation of what's going on with all that. And so that then what leads to these socioeconomic cycles, guys. And so, yeah, historically, again, guys, if you haven't read it, you need to do it. The Fourth Turnings, read that. Definitely read book here, Socioeconomic Theory of Finance by Prechter. It's a great book, guys. Teach you a lot about stuff. And some of that you can read there and go, oh, yeah, okay, great. Yeah, I understand. That's what I thought. Other times you go and you go, what? Oh, my gosh. I thought it was that way. But now you're showing me all this, all these charts where it's not really that way. So I guess what I'm saying, though, guys, is, the more attuned you are to what's going on in the world around you, what's going on with the market participants, I think the better a trader you're obviously going to be. You're not going to be waiting to trade on news events. That's just asking for trouble. Get in before the news events. That's the goal, right? Julio, gosh, I always have trouble saying that. I'm sorry about that. What about the stock to flow model in crypto? You wouldn't follow it as a guideline for this cycle? I don't want to follow that at all. My big issue with that is it's all supply side. That's it. But guys, listen. So basically what it's saying is, because there is a decreasing supply coming, being produced, it says necessarily the price has to go up. But that isn't true. If people don't want it, you could have one of them. And it's worth nothing if nobody's willing to buy it. This idea that the supply side is all you need is just nonsense, guys. Now, that doesn't mean it can't play out something or similar, but the idea that a thing's of value is based basically on the fact of whether or not you've got a limited supply or not is just nonsense. There are lots of things in this world that there's a limited supply of that people don't want. Your neighbor may think they're a painter. They may be painting stick figures in watercolor. And they may have one copy of an original. But according to this stock to flow model, basically, it should be worth a lot because it's a one-off. It's an original. But we know it's not, right? The only way that thing gains any value is if at least one person wants to buy it. If you start getting more than one person, there's only one available, then the price could go up. But supply alone does not dictate value, guys. All right? Let me catch up with you guys here. Let me see who else is here real quick. Let me see here. See here, Sean and Data's here. Who else is here? Spiral Architect, we saw you. Onyx King, what's going on, man? Let me see here. Is that Jelmer? What's going on? Good to see you checking in. Amber Lee is here. Amber says you're amazing and that your charting is crazy good. She's the boss, so I have to agree. I appreciate you guys, man. Always love to hear from y'all. Let's see, who else is here? 51 Ethereum, 51 ETH. Good to see you, man. Yeah, exactly. So many emotions right now. Definitely a lot of similarities with 2017. But how long will it last? And it can take a while. That's exactly it. Now, I tend to believe that the rate of euphoria that we're seeing right now and all this, especially again with, like I said, wish I could remember her name, but that the person was opposite of Joe Exotic, that woman over in the Big Cat Rescue over there in Florida, pushing Doge, not even knowing what it was, calling it Dodge and whatever, on TikTok, stuff like that happening really. And then now with the celebrities really coming in strong, it seems like late late Q4 of 2017 is what it seems like right now. Now, that doesn't mean it can't double, but it means that you should be paying attention to what's going on. Again, retail tends to see all this excitement and they think, oh my gosh, now is the time to get in. But the reality is all that excitement, all that overexuberance that comes into the markets, whether it's stocks or crypto or whatever, by the time that's coming in, you should be paying attention now, looking for an out potentially. But again, retail does it opposite. They see that and they jump in, and that's why you end up buying the tops and selling the bottoms, guys. When the euphoria is at its highest, you want to buy in. When the depressiveness is at its at its highest, you want to sell. Those usually denote the tops and bottoms, though, of what's going on. So, again, mentioning that these things are happening does not say something's going to happen overnight. It could take a while. And if we look at the overall cycle, how's the best way to say this? If we're looking at the major cycle that I've been talking about, right? And not just crypto. Crypto's just a part of it. but the big socioeconomic cycle, basically. If you look at that, this most recent one that we're looking at here, this large cycle top we're looking at is something like a 90-year cycle, guys. So it takes a while for that to play out. Remember, your cycle resets, especially in the markets, are there to weed out the excess that has happened over that entire cycle. Your interior movements there, your interior pullbacks are just meant to wipe out or to try to address the excess that's happened in that little area, that recent bit of bullish run. But your large cycles are going to want to address all that excess that's happened the entire way. Because what you can think about a cycle is you're blowing up a balloon and the first pullback, it pops, right? And then you put some Band-Aids or whatever on it, Band-Aids, to plug up those holes, and you're blowing it up again for the next move up. And so it blows up even bigger, and then it pops again. And then you come down, you reset, and you fix all those holes and everything, you blow it up, and for the third time, it goes up even bigger. Well, now you've got, as it continues to grow here, you're having more and more excess to deal with that you have to reset from. And so that's what we're thinking about in terms of what's going on with this large thing we're talking about. So no, it doesn't happen overnight, guys. Stop with the silly comments. You make yourself look silly. Don't look silly. There's no reason to, guys. Listen, you have a choice. Every time somebody speaks with you or whatever, you have a choice to respond courteously or like a jerk. I mean, to put it simply. And it takes less effort to respond kind to somebody than to respond the other way. So many people online choose to respond the other way because they feel like they're big and bad and they want to be better than everybody else. And they're so close-minded that they can't get over the fact that maybe they don't know what they're doing in a situation in which they really don't know what they're doing. But a lot of it's based off the idea of, again, they get in, they don't know what they're doing, and they start thinking to themselves, man, I need to, I need this to go up because I'm buying in now. I don't know what I'm doing. I'm going to fake and act like I know what I'm doing, but I need this to go up. So they become emotionally attached to the bullish side of that market. And anytime you present them information or things that they don't understand that suggest that maybe it might come back on them, they get very emotionally defensive. Don't be those people, guys, whether it be in the market or anything else in the world in your life. If you are not learning every day, what the heck are you doing? Why are you wasting your time being alive? That doesn't mean go do anything. I mean, seriously, though, what I'm trying to get you to understand is the beauty of being alive is that you get to learn every day about everything. The only person stopping you from learning is you. The only person killing your curiosity is you. The world is out there for you to learn from. Do it. So anyway, I mean, this is kind of where we're getting out there. By the way, just real quick here, in case you haven't heard, the chief scientist at the WHO says that they're getting reports of people who were already infected with the original COVID are now being reinfected with the new variant. And remember, the new variant is supposedly not having good results with the vaccine. There's a real question to the efficacy of the vaccine on the new variant, the UK variant. So anyway, just some stuff to pay attention to there, guys. By the way, if you're into stocks, Michael Goodwell, man, follow him, man. I tell you what, I started following him not too long ago. He's got a lot of great stuff. But right here, he showed this chart here, which shows 23rd of November 2018 to the March 5th of 2020, and then 27th of January 2020 till today. And look at how closely this falls together. And so if it's going to fall, it's got this, this was right before that big drop there. And so, it seems to generally be falling pretty closely, this overall move. Remember, patterns don't generally repeat, but they do often look very similar, guys. And so you've got this pattern here. So, again, be careful if you're long stocks. All right. again, you have a choice whether you want to or not, right? So make sure you are. By the way, I posted this yesterday, I think. Yeah, yesterday here. Look at the DXY. Notice this pattern right here looking kind of similar. We still need to get above this point up here, this 91.6 kind of area. Really need to get above 95, but locally we've got to get above 91.6 to really kind of say, okay, this bullish picture may still be in. But anyway, we'll take a look at this today, and you're going to see how this has played out so far. So, you know, there's some stuff, guys. There's some stuff to think about, some stuff to talk about. Let me kind of catch up with you all here as we start looking at Bitcoin. Hey there, Tail. Good to see you. Let's see here. Universo, you got your copy of STF yesterday? Man, that is fantastic. It's a big book. It's a lot of pages. I think it's like 800 pages. But, man, it is such an easy read, guys. It really is. And if you're truly interested in how the markets really work, you know, the things I try to teach you all the time here, man, that's going to do a heck of a lot for your learning right there. That book will. It really will. Scott's like and subscribe comment got hell for admin review. Oh, man, you got to love that. You got to love that. And then let everybody else out here, it says, hey, do you want to be a king on social media? Come to this website. Oh, God, the advertising is crazy. Hey there, Bill. What's going on, man? He says, welcome to normal UK weather. Yeah, again, guys, I recognize that it's not crazy. You know, I've lived all over the world myself. You know, Japan and Hawaii and a whole bunch of other places. So I understand it. You know, it's not, what's going on here is not really significant in terms of where it happens in other places of the world. But the degree to which of what's happening here is pretty significant for this area. Because we are pretty far down south into Texas here. And so snowfall in this area is usually, you know, like I said, a decades long, you know, between it event type thing. It's a very, very rare thing. So just the possibility that we're going to have not even just snow, but 1 to 2 inches of accumulation. I mean, it's crazy. It's crazy being down here, man. So yeah, crazy times. Let me see here. Hey, what's going on, Train? He says, are you getting into the esoteric stuff? I like it. Really just trying to, you know, really to pull all this in for you guys, because, you know, I talk about so many different things. And for me, you know, this is between my, you know, my formal education, my non-formal education, and then my experience in doing this for a quarter of a century. You know, all this stuff is pretty much second nature to me. And I have to sometimes catch myself when I'm talking about it, because I'll remember that many of y'all do not have this same type of experience in education and whatnot with the markets that I do. And I have to remember to catch myself and to start drawing some parallels and some lines so that you can see how all these things kind of pull together in this grand way that I view everything. Because if I don't, you tend to think, oh, well, he's just saying whatever, you know. And those of you that have been following me for a long time, you should know by now that I don't just say something. But if you're new, it can seem that way. So I try to anyway. Get a little bit more into it. Let me see here. Eric, what's going on, man? And hey there, Brian Riley. Good to see you. Eric says, what are your thoughts on EWI's analysis that we were in a wave 3 of a larger 3 right now? Seems to line up with all the increased positive sentiment. It's definitely possible. It's definitely possible. You guys, you're going to have to note that I have never actually said this is the top, sell everything. I've never said that. We've looked at what's happening. We try and figure out, okay, if it's going to be a top, then where are we looking and why? But until the market actually reverses, you know, again, as I continue to tell y'all, you trade in the direction of the market. What I try to do here is to help you pay attention to things that you should be paying attention to so that you are able to get out if the market reverses, rather than to just continue playing it thinking the trend's going to continue on. Because that's one of the most difficult things for new traders to do. They get into a trend and they think, oh, that trend's going to continue forever. And like I said, then when the first pullback, they get scared and they're like, oh my gosh, now I lost all this profit that I should have taken. I can't possibly get out now. What if it goes up? Not only will I have lost that I could have got, then I'll lose it again. Oh, I can't do that. Instead of concentrating on how much profit they do have. Again, guys, in the markets, the largest challenge you're going to face is your own emotion. That's it, guys. It's not the charts. It's not what some Yahoo online says. Your biggest challenge that you're going to face day in and day out is yourself, your emotion. And it's a difficult challenge, guys. which is why most traders don't end up being profitable in the markets. I mean, it is what it is, right? Unfortunately. So, my goal is to try and help you out as much as possible. But again, guys, the old adage, you can lead a horse to water, but you can't make them drink. I can't force you to understand what I'm saying or to even be open enough to consider it. I can just present the information to you and hope that you at least have an open mind to think about it. I'm not telling you got to believe anything I say. But if you're dismissive immediately into something that you truly don't know, and you got to be honest with yourself, do you know it or not? And if you're immediately dismissive of it, you have to understand that you are being completely emotionally attached to the market. And that never makes you money. It loses you money. And the goal here is for you guys just to make money, right? And to lock it in and keep it. It's not good enough to get money on paper, guys. If you don't lock in those profits and realize those gains, you might as well not have had them unrealized at all. Let's see here. Let me catch you here. What's going on, Candle Shepherd? Good to see you checking in. Carol Baskin, White R21. Thank you. Yes, that's her name, Carol Baskin. JWS, what's going on? He says, be fearful when others are greedy. It's I think it's a Warren Buffett quote, right? You want to buy when there's blood in the streets and then be fearful when people are greedy. Yeah. And that's exactly the way it is. It doesn't mean, again, that tomorrow price drops, but it means you're being aware of what is going on. Because if it gets to a point where there's, the greater that overexuberance, the greater that rubber band stretches, the more devastating it's going to be when it lets go. All right? Now, I'm not saying maybe that's with crypto right now. It's definitely looking like that with the stock market. So be careful with there. Hey there, tell you right here, what's going on, man? What's going on, Lewis Winthorpe? I got her off the screen there for you. Jelmer, you're saying this is what similar to what Ray Dalio said? What I'm saying here, or what somebody else said? Grumman, hey, glad to have you logging into the chat, man. Let's see here. Ray Dalio says Ray Dalio messed with his mind in March when his theory was it's like 1929 to 1930, Great Depression. Again, the idea of where is it going to be? I think, again, we were looking at that as being the top right there. It didn't. Okay, fine. I did have that alternate, which showed that, that I posted back there in December of 2019. I've shared that link many times. That showed us potentially having that megaphone pattern going there, which is a fourth wave. So, of course, what's going on in stock markets would be a fifth wave. And so that big drop down is basically your warning shot. It's like, hey, pay attention, market. Market just shows it off, says, no, it's a new bull market. We just had a 10-year secular bull market in stocks. And then we had what they believe is going to be the shortest bear market in history, with that fell faster and harder than 1929. And they think right now is the start of some other next 10, 20-year bull market. It's absolutely crazy when you've been in the market for years, you've been through multiples of these, to see people actually talking like this. Especially people who should know better, people who are larger money managers and whatnot. But again, as I said, when you get to the larger cycle tops, everybody's all in, and that's what makes them so much more devastating when they come to a close. But you've got to get all this emotion to a top first, to a peaking point first before that's going to happen. So, again, the idea is just to notice these things are going on. So that way you can ride the emotion up and make money on everybody else's emotion, but you're going to be logical and know where you have to take profits along the way. That's the thing. Hank says distribution of snow leading to accumulation of snow. I am confused. Man, you're a mess. Aramis, what's going on there? Let's see here. Tell you Ryder saying Ethereum's pushing on the new all-time high Coinbase Pro right now. Had the same message from a friend asking if they should invest in mining. Man, investing in cryptocurrency mining right now, I think it's ridiculous. Especially when you're looking at coins that are, they've been around for a while. I don't think there's really a lot of money to be made unless you have a lot of money to put in it. And I mean a lot of money. I don't know. To me, it seems like mining isn't the place to be unless you are, again, like that. Kendall Shepard, you said the dancing TikTok girl was getting you nervous. Had to check the feed and see what she was promoting. I think I'll go and sell my crypto now. Let's see. Chester, what's going on, man? You said, I am curious. While I understand your cautionary tales to retail traders, Scott seems to be a bit more on the euphoric side with Bitcoin in the crypto market. I'm not at all saying that you're bearish in comparison, but can you speak to the differences in thinking? Sure. I've been doing this for 25 years. The reality of it is just, where we are here, in how do I say this? Just because you learn how to read the markets, potentially what's going on, doesn't mean you're going to come to the same conclusions. All right? Scott happens to feel that we've got a lot more upside than I do right now. And he may be right. But he is not immune to noting what's going on. And we were actually just talking about this, I think it was yesterday, as a matter of fact. Yesterday. So, I mean, it's not like Scott's immune to what's going on, guys. He's not, oh my God, there's, blah, 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 close my ears and eyes and whatever. But, again, I'm not here. The one thing you should understand is with TWC and what I do there and what I do here, I'm not here to make you believe what I believe. I'm here to say, listen, this is what I believe, and these are the same things that I'm watching. And this is why these things are important to watch and what they usually mean. But even in doing that, it doesn't mean that you're going to come to the same result. Or even that you're going to come to the same result as quickly. The same idea as quickly. And again, a lot of it happens to do with your level of risk tolerance or risk aversion. I've got very little risk tolerance in the markets. I'm much more risk adverse. So I'm more cautious than most people. Because for me, that's what works. And it's worked extremely well now that I've been doing it for 25 years, the first 5 years were, anyway. Probably about 20 years or so. I've been really much more cautious about my, risk management there. So, I mean, that's the way I want you guys to understand it. The goal is not to convert you into a mini Chris. That's not the idea, guys. But the idea is to say, here's what I look at, here's why, and here's the results I'm coming to because this, and this. But I'm also not saying that this is going to happen immediately here, which is why we always have possibilities to the upside and downside. Because then, regardless of how you feel and how emotional you may be in the market, at least you have some points to consider if price does one thing or the other that's opposite of what you're planning on doing. So yeah, hopefully that makes sense there. I'm actually, guys, I'm pretty overall bullish on Bitcoin and cryptocurrencies. You guys know that. Or at least hopefully you should if you've been following me for, a year or 2 or 3 here, whatever I've been doing this for. But, again, just because I'm bullish on Bitcoin and crypto and whatever in general, at least Bitcoin, that doesn't mean I'm going to ignore, the signs that are showing up in the markets when they come up. Because we're talking about trading here. We're not talking, if you're an investor, again, if you're investing right now and you've got a 10-year time horizon, you may just be fine buying here, even if it comes down and comes down hard. Even if it were to do that, your time preference is much, much larger as an investor that way. But if you're a trader, buying here and holding for, a year or 2 years or 3 years, isn't 5 years or whatever. I mean, that isn't something that you should be interested in doing. So yeah, it all depends on what you're talking about with there as well. Let's see here, Chester. You're very welcome. Sure, for sure. Telluride says, what an opportunity this has been, though, for so many crypto bag holders to get rid of old coins and profit projects that don't seem to be more legitimate years later. Yeah. And so guys, people that have been with us, especially been in Discord with us, for, a couple of years now, they're going to remember that we were talking again, guys, we were talking about, Let me see here. This was April, March there. Yeah, here. We were talking about buying here. We were talking about, we were looking at this possibly being a bottom here. We dropped through, and when we dropped through, we said, this is it right here. It went up here. We said, this is it right here. And we said, listen, this is going to be your buy here on Bitcoin. 4,000 people were very nervous. Crypto Twitter, everybody else said, no, it's going back down to 1,800, 1,200, whatever. We said, no, it's going to pop up, no problem. Again, right here, it's 6,000. Everybody was concerned there was getting hard rejection there, 1,200 or lower. I said, no, I explained why this right here with this going on right here. And what happened here, why this would just slice through it like a hot knife through butter, which is exactly what it did. We put our target for everybody to see, paid members and not, when we were up here. We had a PNF target, a point and figure target up here, which we hit. We had this drop here, and when I was actually live in Discord talking about this as it was happening. Our members that were around at that point will let you know that I was. And we talked about, hey, it was probably a decent buy around 4,500, 5,000. By that time, it looked like Coinbase was doing well. It looks like we were getting the movement that we needed up. And so, again, we were talking about that. It isn't until we started looking around, around 10,000 or so, and I started looking at other possibilities as well, and then keeping in mind this larger macro idea of this large socioeconomic event happening, that I started talking about, well, maybe it's possible that we're going to get that this here, rather than this being a 1 and this being a 2, this is a 1 and this is an A and a B and a C, maybe something like that. And it was only about that time it did, but because at that point we were really starting to see these markers in the other market, the indicators and whatnot, that were really strongly going, well, something may be happening here. And then, of course, like I said, we had that first, this warning shot right here. And then you have this over-exuberance of this move up. And so I can see why people get excited about this, thinking of 2017 here. I can definitely see that. But the overall markets, overall market participants, overall socioeconomic cycle type thing is a lot different in this area than it was here. Okay? We didn't have this side topic. We had easy money coming in here still here. Very easy money coming from the Fed, whatever coming through here, which was being distributed throughout the economy to an extent. Not really like they needed it to. I guess I should say not the economy, but really kind of being distributed into assets, which gave the asset rise. Remember, the whole idea of the Fed putting money into assets via QE is to make the markets look better, so people think, oh, the markets are doing better, so the economy should do better. And then they get out there and they spend and they take out more credit. At the end of the day, guys, the game is credit. What is going on here? You guys talk about the dollar and all the production of dollars out there and all that stuff. Guys, at the end of the day, it's what is credit doing? The Fed's printing of dollars is not affecting real credit expansion, because most of that money goes into the vault, again, for the banks to use as collateral, not as collateral, but as reserve requirements needed to make loans. The idea is that the money is there to convince the banks that now they have more money to loan. So the money creation, the actual dollars you should be interested in, are happening at the bank level. What is the bank creating via loans and whatnot? That's what you need to be paying attention to. And that was a lot lower last year than it's ever been. I've shown these this credit expansion thing where we look from the 1970s up to now and how much it's increased and whatnot's going on. But the other side to that is also the destruction of dollars out there, the destruction of credit. The instead of expansionary credit, contracting credit. And that occurs two ways. One, people slow down how much they're actually borrowing. Excuse me. So less people actually take out loans, and those that do take out less money. So there's less credit expansion, right? Part two of that is that people take the money that they do have and they pay off the loans that they have. When you pay off the loans, the dollars go back. You're destroying dollars. And we had a lot of that last year. So we had a lot of both of those things. We had a lot of a decrease in the number in the amount of credit being in the credit expansion. We had a strong decrease in that. And at the same time, we had a strong increase in credit contraction, the destruction of the dollars that were, because all these loans and everything were getting paid off. It's all about credit, guys. And that's why I keep talking about this being this large credit bubble, which really kind of started to a great extent after Bretton Woods, in the early 70s there when we went off the gold standard and we could really start doing some serious expansion of credit. So while this may seem eerily similar to here, what's going on right here to me seems a lot about what's going on here. But the background behind this, what's going on with, remember, what you see on the charts, guys, is a visual representation of what's happening. But if you don't understand what's actually happening, you can get the same result, but a different background, which means your result may not be as you expect it to be. $400,000, $800,000, $1 million by the end of this year, like people are starting to say a lot. Those are crazy numbers, guys. It was as crazy as the guy back over here that I keep talking to y'all about. That was my clue that, listen, the top was really right there. That last week the last week here leading into the all-time high in 2017, I came across a guy online who was promoting Bitcoin. It said 80,000 by February. That was mine and Scott's note that, hey, that's the market tops in. It might get a higher high here, but the top is in. And sure enough, it was. We're getting those same kind of crazy calls right now. We've been getting them, guys, since the end of last year, remember? And so again, these are things that we have to pay attention to because they generally denote topping areas. And if the background, what's going on here, is different than the background of what was going on here, then necessarily this doing here may not get you the same kind of results you're looking at here. And that's what we're talking about, guys. That's what we're talking about. Let me see here. So, that's kind of where I'm at. That's why I'm cautious. That's why I'm cautious, guys. Because of that whole real macroeconomic background, what's going on right now with where we are, what's been going on. That really kind of gets it in there. Let me see here. Scott Bias, you say you got a one-day time horizon? I like that. Day to day. Play day to day. Then he asked, with low rates and stimulus, won't the rally continue until that changes? Why? What's stimulus? First of all, we don't have any stimulus yet. Nothing's been sent out. Second of all, in the grand scheme of things, those few dollars that are coming out are very tiny in comparison to the amount of credit that's already out there. The dollars that are already potentially in circulation. Third, even if that stimulus money comes out, there's no guarantee what's going to happen with that money. I mean, it seems like your assumption, and what most people's assumption is, people are just going to go out and spend it like, woo, time to have 14 meals out this week kind of thing. Most people aren't going to do that. If they're still worried about the economy, they're either going to stick it in a bank, save it somehow, which means, again, money's going away. It's not circulating, so there's no real effect of that stimulus, right? Or they're going to use it to pay down their debt because they're concerned that things might get worse and they want to have more wiggle room. So you pay down your debt. The same thing as what they did last year, with throughout the year, paying down debt. And again, as I just explained there, that leads to credit destruction, credit contraction, dollar destruction, credit contraction. So, when somebody says stimulus, they're making a whole lot of assumptions. Now, people could potentially just go out and blow it and, eat out 14 times in a week or whatever. I don't know if they're going to or not. I don't think they're going to. I think the market's still too wobbly. I say the market, what I mean is the economy is still too wobbly for that. Worst case scenario is that they put it into crypto and stocks and everything, money that they actually need for other things. They put it in there, and then the bottom drops out, and now they're exponentially worse off than they were prior. I mean, think about the potential for what could happen here, guys. The markets are frothy and euphoric, right? Many people need the stimulus checks to pay for their bills and whatever, or at least should keep it just in case things get worse. They should save it so that they can, pay bills or whatever just in case they lose their job, they lose some hours, they get docked pay, something like that, right? And then they go and instead of doing that, they take that money and they put it into these frothy markets. And then they ride up because they start thinking, oh my God, I'm going to be financially free now. It's just the beginning. It's just starting to go up. But what did I tell you at the beginning? Retail tends to get into markets when we've got those videos like I showed you, those things going on where everybody's like, oh my gosh, right? That's what causes the FOMO. It builds on itself, right? So they get in there, they ride it, they don't take profits, and then there's a big, huge drop. And all of a sudden, they're in very little profit or they're already negative. And instead of cutting it, they continue to ride it down there and, they lose everything and maybe even more because then they go with the little bit they have left. They think, oh my gosh, well, it's dropping a lot, but it looks like it's going to be a bottom here. It's going to go back up higher. So if I put in this last little bit I have here, that'll help bring down my overall cost. And I'm dollar cost averaging. And my overall price is going to drop so I can make even more money on the way up. And then it goes up and drops hard again. And they're screwed. I mean, that's the potential of what could happen. I'm not saying that's what's going to happen, but I'm saying, guys, if you don't recognize that potential is there, what are you doing? Let me see here. If stim checks go to buy Doge and GME, I'm not sure it helps anyone, right? Right. Let me see here. I don't think most stocks are cheap right now. What are 3 cheap but good stocks for long-term 5 to 10 years? Well, if we have an economic downturn like I'm thinking is going to happen, basically depression-esque, something similar to 1930s, I think there's going to be a couple of stocks that are going to do well. In any kind of economic downturn, you usually look at things like consumer staples, things like that, but at the end of the day, most of the market is going to peel off quite a bit. It'd be safer. If deflation hits and we get this depression coming in, you're much better just holding cash and then buying on when it gets down low. And then you buy, and then you've got a pick of them to go from. But if this happens, a lot of companies are going to go under. We have a lot of zombie companies right now being propped up by this idea that the Fed's going to support them all. The Fed's going to keep buying those assets. But guess what, guys? The Fed isn't going to continue buying them. At some point, the Fed would go, you know what? We're going to cause more problems here in the market than we think we're fixing. And we just need to stop. And they're going to let the market take over. The Fed, guys, if you believe that the Fed has any real control over the overall movement, they can cause knee-jerk reactions and whatnot, depending on your time frame. But overall, the market is pretty, the market's going to do what it's going to do because it's about people, not about the Fed. It's about, the market participants and how they view what's going on in the world and locally, not what the Fed does. The Fed hopes they can get you to do the things they need you to do. Then you get the banks to do the things they need the banks to do in order to continue to prop up credit. But if you don't buy it, if you say, nope. And a lot of banks did that last year, in spite of all that money that was sitting there for them to make it. Their lending standards tightened instead of loosened. The idea was that they were supposed to loosen, but they didn't because they were too worried. And then people in general, how do people feel, And so, that's kind of where you get to with all of this. Brian says stimulus won't cover gas fees on Ethereum. No kidding, man. Jeez, the cost to move USDC or anything is just stupid. It's just getting really just out of hand ridiculous now. I don't know, man. In good times when there isn't a whole lot of congestion on networks, the fees to transfer, Bitcoin or Ethereum or whatever, USD and all that can be pretty cheap. But man, times like this, like on the Ethereum chain where the fees are so high, it's so much cheaper to send a wire transfer. It's so much cheaper. Now you're going to have other things you have to, to balance that against, like, who you're sending it to and are they banked or unbanked and all these things and, how much privacy you want, stuff like that, potentially. But if you're looking at fees alone, it's so much more expensive to send anything on Ethereum right now than it is just a simple wire transfer. You can send a wire for 15, 20 bucks. No matter the size of the money you're transferring. So yeah. So we'll see what happens. But yeah, so I mean, as far as what stocks would be great to go right here, I mean, stupid money has been made with the setups we've been putting in our hot takes here over the last year. I mean, obviously, because everything's been going up, right? But man, again, guys, we were telling people to buy naked NAKD back in June or July for something like 6 or 7 cents. Have you seen what it's gotten to already? We've got members who have just made insane wealth off that. We get these things. We have lots of these in there. But it's really, a lot of it's the product of the market itself, guys, and this overexuberance. So, the idea is to lock in these profits and not think they're going to continue on forever. If you feel the need to get in again, well, okay, great, but do it after you lock in your profits. Find a good entry and enter again. Otherwise, all those profits, you don't ever realize them. And if that thing tanks on you, which it can do, you've got a lot of money you can lose on that, unfortunately. So anyway, let's get to looking at these charts here real quick. So what are we looking at? Well, with Bitcoin here, we've got this large, to me right now, this large, pretty locally here, the 1 hour and 4 hour, this large ascending channel here, channel-ish looking thing here, is the key right now. I think if we drop a close here below this EQ, I think that puts downward pressure on price. And of course, that gets you below the higher volume node here. And at that point, you look at this green box here, this lower end of the range. If you're losing that, at that point, we've got this little area right here that may or may not provide some kind of support. But again, you really just kind of look at the top of the range here, this large range. Remember here, we've got this large range printing right here. And so you want to see either a bounce off this area here, or if it continues to come into there, we're likely to see it coming down about mid-range. So, if this is correct with A and B here, which is what we're looking at, and we get some kind of downward movement, I think, we're probably looking, again, if we get downward movement, we're probably looking at something like this here. Something about this, maybe this area down here. Or even this kind of area down here, at least. If this ends up being reaccumulation here. I think it's still too early to tell at the moment. I think it's leaning to reaccumulation, but it's really too early to tell at the moment. I want to see, do we get a rejection in this area and it comes down? And if it does, how large are the candle spreads and what kind of volume are we looking at? That's what I want to see in here. Are we going to see a ton of supply showing up here? Because if we do, it's possible this could just be an upthrust here as far as distribution goes. And then a move down. Like I said, right now, though, there is the possibility it could just bounce off here, in which case, basically this becomes, C and D, phases C and D, and then E up here. It continues up. But, I don't know. I'm still having a little issue with this right here. Your first dip down, you got your volume spike that you expect. Your second dip down, this is the test of this area right here, and you had greater volume. You should have lesser volume here. Greater volume tells you you've got more supply coming in. I'm not overly excited. If we had a lower volume on this test here, I'd feel even more bullish about this. But this keeps me in check right here. It doesn't guarantee that it's not going to go up, but again, when you see that your test is coming in on greater volume, that's potentially concerning, because you want to see less interest on pushing price down when it comes down again. Basically, you want this one here to have told supply that, oh man, this is a bottom here. Second time it comes down, some supply is still going to try to come in, but the rest of it should be like, this is the bottom here. And so you should get a lower volume profile on that. But you don't. You've got a greater volume profile. And that's concerning. But for right now, I think these are your three kind of big things if we get a drop here. Now, there's always the possibility, again, you get a reversal out of the low end of this range here where we've already got this activity. Maybe even this smaller little dot right here. But I don't think this holds. This right here was already tapped when you had this drop into it. I think if it comes down again, it goes through this again, and then you start looking at this upper area here at least before you get that move up. But the longer this does play out, especially if this is reaccumulation here, the longer this, if this comes back down here, the longer this continues to play out, the greater your advance is going to be if this is reaccumulation here. The higher up it should be. Your height, your expansion out of reaccumulation is based on basically the length of time you spend in phase B. The more that phase B plays out, the longer it plays out, the greater movement you should have. But it's also the same way if this is distribution, if you're going down. It's the same idea. Your phase B is your building of a cause here. This is setting you up for the move either up or down. And the longer this persists, the larger your movement up or the larger your movement down is going to be. So we'll see what goes on. We'll see if this is just an up thrust here and a move back down, or if this is actually, maybe this is a smaller wave B here. You got wave C, or wave B. A smaller phase B here, and then you've got phase C, phase E, and then phase D or something like that there. Most often, you're going to get some kind of pullback to this range here, though. So that's why we've got this first one up here. Let me see here. Hey there, Barbie doll. Oh, okay. Good to see you checking in. Let me catch up with you here. What's my opinion on Solana? I don't know. I don't tend to follow this idea that fundamentals, specific company fundamentals mean much in this market right now in crypto. I'm still of the firm belief the only thing that really matters in crypto is whether Bitcoin is acting bullishly or not. Bitcoin is the big fundamental. Everybody was excited about projects back in 2017. All the ICOs, it's going to be doing all these great things, and they're going to do all this great stuff. And some of them actually had plans that looked pretty cool. But at the end of the day, it came down to what did Bitcoin do? Bitcoin went down. Everybody else pretty much went down. So right now, any advances you're getting off right now are purely emotional. What do you call it? Emotional shilling and whatnot that's going on out there. That's my belief. And it's okay. You can make money off it, but I think you really put yourself in a bind if you start getting involved in a crypto because you like the team or you like the project. I think that really. This isn't stock market, guys. Which even the stock market's getting distorted by that. Again, we talked about zombie companies running out there. Companies that should be out of business, but they're only in business because the market seems to think that the Fed's going to bail them out. There's a lot of these out there. And if we have this movement down in the stock market that I'm talking about, those zombie companies are going under. That's going to be a lot of bankruptcies, a lot of more people out of work. And that's going to drag down the economy. It's going to scare other people. It's all in how do the people feel about what's going on globally and locally. And even if it's not affecting your job, you're going to feel like maybe the economy's not doing so great if everybody else is losing theirs, right? So, even the stock market's getting to that point where it's just hey, some guy on Reddit said, let's do this, or something like that. It's okay to make money with it, but just be honest with yourself about what's going on. Because most of these things that people claim, the fundamentals are so great, fundamentals are trash. The ideas may be cool, but, ideas are a dime a dozen, right? Can you pull them off? That's the real thing there. And most of these companies can't. So I tend to view what's going on more in the lines of what's going on with Bitcoin. Because if Bitcoin trashes the bed, guess what? Everybody else is going to trash the bed too. more or less. There's always going to be a few out there that tend to bucket. 2019, I believe, was Link. 2018 was BNB, Binance Coin. But almost your entire market's going to go, down with it if Bitcoin goes down. And you'll have to remember, guys, again, when we talk about the frothiness of 2017 compared to the frothiness now in the crypto market, the frothiness of Q4 of 2017, you'll remember there was a lot of shilling of projects out there, which is, again, what we're starting to see here, or what we've been seeing for a bit here. So just be careful with it. Just understand that most likely any of the rise has nothing to do with the company, but it has to do with who's shilling it and what kind of, FaceTime they're getting out there with the market. So, yeah, just be careful, guys. Let me see here. And I'm going to have to take care of some people here. Give me just a minute here. Elon Musk was not in our stream, guys, I promise you. Elon Musk was not there shilling XRP. Let's see here. Is one of those takes XLM? You have to tell me what you're talking about there, Bernardo. You have to tell me what you're talking about there. But yeah, so that's my general thought on cryptocurrency projects and whatnot out there, guys. Now, most retail traders are going to listen to what I just said, and they're only going to hear what they want to hear, which is, oh, he said, don't get into them. Or he said, something like that. I didn't say that. I specifically pointed out that it's fine to ride the emotion of everybody else. Just make sure you're not the one getting caught up in it. That you're being smart and intelligent about the way in which you're riding it and where your stop loss or where your take profits are. Because if you can't, guys, I'm going to tell you what right now. If you don't take profit when you're in profit, when are you going to take it? If you're retail, most of the time your thoughts is, well, I'll take it when it gets here. And then it gets here. Oh, I'll take it when it gets there. And then you keep moving that goalpost. Because emotionally you get attached to what's going on. And then you have that strong drop and you're still well in profit, but you refuse to take profit because all you can concentrate on is the I should have. I should have taken it up to where I said I was going to take it. And then you start praying, God, please let it go back up there. If it gets right back up there, I promise I'll get out. Most of the time it doesn't. But when it does, guess what? You don't take profit. I swear to God, you guys come here, tell me, be truthful. It happens, right? All of a sudden you feel comfortable again. You're like, oh no, it's starting the next move up. We got a target up here now. And then it drops on you again. And the same thing happens. You refuse to get out of it because all you can concentrate is what you feel like you should have had rather than what you actually have. And this is just typical, we're human beings, guys. We're emotional. This is the way we tend to work, which is why you have to be mindful of that. Let me see here. Is Stellar Lumens a crypto project? Is it? I'm sorry. I'm not. Are you asking if it's any good? I mean, again, my thought on particular projects is what I said in general. That doesn't mean they can't have productive charts and whatnot, but you have to understand what those charts are based on. Again, I just think you're going to lose out a lot more than you'll ever win if you're trying to base your crypto where you should invest your crypto money based because, some company looks like it's going to do something great. I think we're still too early for all of that. What I would think, this is what I told everybody back in 2018. Again, I said, in the next bull run, I said, we're going to have to see really good, movement with Bitcoin and whatnot to bring in the institutional investors, which of course is what's happening. And I said, and you're going to need to have that floor kind of come in. And then after that, the next bull run after that, I think you can maybe start looking at individual companies as more fundamentally valid or not potentially. But I think right now, what's going on now, I think it's just still all dependent on what Bitcoin does. What did Bitcoin do? That's the question always. If it's not what do you want it to do, it's what did it do and what is it actually going to do. And so if Bitcoin, takes off downward, Y'all have to also remember, guys, in 2017, whatever the 17th of December 2017, when Bitcoin hit its all-time high, it wasn't for another 3 weeks later that alts started topping out. You know, Scott made a great point the other day on Twitter. If you guys follow him, at Scott Melker, make sure you guys are following him too. You know, he said that it's that time of the cycle where it's throw your dart at the dartboard and, you know, make money. Pretty much is what it is. But the last time that happened was, again, coming into December of 2017. That was the last time that happened. I should know. I did so many stupid charts back. It was crazy. Every day. Right now I'm doing probably 10 to 20 chart requests a day on top of everything else. So again, we're kind of getting to that area where everything's looking kind of frothy and, you know, making these large moves up. They're overextending way past our targets, you know, than what we should generally see. You know, it's a product of euphoria in the market right now. White R1 says tier 3 is amazing. I love it, man. Thanks for saying that. Wazobia Dollar says, checking in from Nigeria. I must commend the work you do for tier 3. Best group I ever paid for. Well, I appreciate that. Thank you. Thank you. You know, we work hard, guys. You know, everybody else is out there just to sell you whatever they're trying to sell you. I think that you should be getting value for what you're getting from us. If you're not, then why the heck am I? If you don't feel like you're really getting that value in general, you know, some people are going to be different, but in general, if our members don't feel like they're getting that value they're paying for, what the heck am I doing? Because I spend a lot of damn hours doing this, guys. I'm usually on Discord from 7 or 8 in the morning till, you know, 1 or 2 in the morning. 5 days a week. Except for in the middle of the day if I've got to, you know, get some things taken care of outside the office. But I mean, it's a significant amount of time that I'm working there, you know, hoping to make sure everybody's, you know, getting the things that we need them to get. So, I mean, that's where we're at with all that. Might consider a lifetime membership. White R21. We don't have any lifetime memberships yet. Who knows? Maybe some point, right? Glad to see you guys are agreeing with what I was talking about with, you know, just the general emotion that we have in the markets. Let me go ahead and jump in here real quick, guys. So, I mean, this is really kind of, in the grand scheme of things, what we're looking at in terms of price action here. Before you get too confident about potential up, which right now, guess what, guys? This is your base right here. We're finding support on that base, okay? But we are dipping into it. So, again, I think if we get another dip into it, I think we touch into here. And I think, you know, into this lower base here. But I think if we're getting there, we're probably headed down at least to the range top here around that 42,000 kind of area there. That's that large trading range. And if we lose that, then we should be looking about mid-range, if not, you know, mid-range, 2/3 down into the range. And if not, then below the other swing low back here, you know, probably around 26, 28,000, something like that at least. I've got some targets around 21,000 as well. And, you know, again, depends on how the volume and price action looks coming down. But, you know, it could open up a whole can of worms to a much further thing. But we don't know that right now. So we just play locally here and we watch these levels and how it reacts at these levels. So you could, if you think it's going to go down, you can short and just watch how it reacts at these levels. And if you're getting a good reaction out of there, you can go ahead and lock in your profits. And potentially... excuse me, potentially go long if you feel like that's what, you know, that it's made a bottom or it's heading back up. But if it continues then down below that, you can then, again, short some more looking at those lower targets. Too many retail, they're trying to get in right here, and whether it's up or down, looking at the very long haul. They want to get in right here and go up to 100,000. Or get in short, you know, get in long there and look at 100,000, or get in short right here and look at 20 or 10 or 5,000 or something like that. And I think it's entirely the wrong way to do it right now in this structure. I think we need clear confirmation of what's going on right here. And if that leads back into here, then we need clear confirmation of what's going on in here before you really start looking at those much larger moves in either direction. Let's see here. If Elon gets into XRP, I'm selling my TSLA and not buying a Tesla. Hank says he'd like Bitcoin to break the daily R2 this weekend. If not, we might take a little break. Yeah, so that's where I was going to go here. So real quick here, notice your H1 Stochh RSI here is almost back into overbought. You're just neutral on RSI, but RSI is in a downtrend. Even if you look from up here, you know, that's a high, a low, potentially a lower high leading to a lower low, potentially. But this is a downtrend, whether it's locally here or this larger picture. I mean, I guess if you want to look here, you can go, maybe this is a part of an uptrend, but it's still within this larger downtrend. The same thing we were talking about when we were over here. Remember, we were talking about market structure. How you had this downtrend coming here and how you had to break above this point over here to kind of invalidate that, you know, to kind of validate the new bullish trend. It's the same idea with what you're looking at here. You've got to get above those other points. Otherwise, you're still in that downtrend. If we jump here to the 4-hour, 4-hour's got this large bullish or bearish divergence here coming down, as you can see. Let me kind of take off some of this here. There we go. Grand scheme of things, really just kind of bouncing on the R2 right now on the H4. But if we're losing it and it can't get held here, I think, you know, you end up going lower. Because at that point, all of a sudden, you know, if you look in here, you've got your high, your low, your lower high, or your higher high. You know, you've got this movement up here. But if this drops down below this swing low here at 43.7406, if you drop below that, all of a sudden, you're not having higher highs and higher lows anymore. Now you've become lower low. So that changes the structure of what's going on here. Again, you can note that you got the higher highs in price here, lower highs here in the oscillator. Bearish divergence on the 4-hour. 4 hours is a pretty significant time frame. Stochh RSI is in an uptrend, but is neutral right now, right around 50. So it doesn't give us a whole lot of help at the moment. There's a lot of room for it to just reverse and fall down, which you could do from this point, because there's a lot of room here in RSI for RSI to come down, which means together there's a lot of room for price to fall. And again, you need to pay attention to this area here. You know, again, if you're losing this 44,000 kind of area here, 43.8, 44,000, you've basically got no support here. You should expect to drop down toward 40. Potentially down here toward, you know, 38, 39 even. You lose that. Well, now you've got a bit more support consistently through this area. So there might be a bit more work there. But you could end up, you know, heading on down here toward, again, even this 34,000 here. But you have to recognize there's no real support here. And you have this little bit here, which may provide a little bit of a bounce, but overall, this whole thing, that's the only little bit of support there. If you lose that, there's no reason you shouldn't be coming down. Daily, again, daily, we've got this large bearish divergence still as well. Stochh RSI is overbought, curled down. Crossed bearishly, curled down, still an overbought. So, you know, between those two things and price sitting up here at the R2 resistance, you know, as Hank said, you want to see a good close above that on the daily, and then you need follow through. It's not just one candle close above it. One candle close above it gives you hope. You need a second candle closing above that to start feeling more hopeful. And that second candle, the more bullish it is. In other words, if it's just a doji, it's still positive, but you know, you're still seeing supply coming in. But if you can get a nice, large, bullish candle spread after it closes there, that next candle, then it says a lot for the bullishness going on, and you can definitely look higher off that. If you drop below the R1 pivot, I mean, you can hit the pivot here, but most of the time when you're doing pivots, you make this move up through the R1 to the R2. And if you reject the R2 and it drops below the R1 and continues down toward that pivot, usually that pivot isn't going to hold. You're going to head down here at least to the S1, if not the S2. That's just trading pivots. Everything else aside, that's pivots trading. That's what normally happens. Now, that isn't a guarantee that's what will happen. As you can see, there is support around this pivot area here. But the lack of being able to advance above the R2 and then drop it through your previous support and coming to the secondary support, I mean, that's a big slap in the face. Wake up, pay attention to what's going on there, because it's telling you right now there's not enough demand to support it at the previous support. this is your last chance here. But again, most times if it's coming back through that all the way to this one, it usually continues on down. And it tries to garner some new support down here at the S1 and potentially even the S2. And heaven forbid it continues through that, because you should be looking at the S3. Forget what your emotional attachments are to the market. If you're losing S2, you should be looking at S3. And depending on how it gets there, you might run the pivots. In this case, no, you wouldn't run the pivots on them. There's no S5 anywhere in there at this moment. But by the time it got down here, it would probably be, it wouldn't be in February that it would happen. So you can have new pivots coming in, in March. But locally here, through the end of this month, you definitely want to see a close on the daily above the R2, and then you want to see the next daily close be a nice, strong, bullish candle spread to really feel good about this continuing up. Because if you can do that, you're probably going to run the pivots up here. I wouldn't be surprised to run the pivots the rest of the way up there toward that 68,000, 70,000 area. There's a lot to do to get there, though. Right now, clearly, a lot of resistance coming in right at the R2 pivot right now. Let me see here. Oh, yes, thanks, Hank, for bringing that up. 3-day weekend in the markets, so not crypto, of course, but if you're trading Forex with Forex brokers, or if you're trading the stock market, we've got President's Day on Monday, so, the markets will be closed, so they'll open back up again on Tuesday. Your futures markets will open, late Monday. Crypto will be open. But crypto's going to have a 3-day weekend. Now, does that mean you're going to have more, from what's coming in from people because they won't be at work? I used to say that, it's a 3-day weekend, so people are going to be out doing things. They're not going to be sitting at home in front of a computer. But with the pandemic and now the snowstorms that are coming across the U.S. and whatever, people might be stuck in the house. They might just go ahead and jump on. So just be wary of the weekend activity. Be real good with your your risk management, your stop losses, your take profits, stuff like that. There's bound to be liquidity issues, which means price can rise or fall pretty rapidly. And especially in terms of falling, if you've got, a decrease in liquidity and you're coming down toward this support area here around, 44,000 and you lose that just amplifies the idea that you'll probably get down, at least down here toward that 39,000, 40,000, toward the bottom of that Elon candle right there. So yeah. So that's what we definitely want there, guys. If you're just getting a push up above and then a close back down below, it could still be telling you it's going to go higher, but you need to still be cautious. You need a clean move up and close above, and then, like I said, the next candle should be opening above at that point, and you want to close. And again, the more bullish that secondary candle can be, the more impulsive that candle is, the higher to the top of that candle, the day's high that it closes, the more bullish you can be about that move above it, I think. So, yeah. Let me jump in these other markets here real quick, guys. Let's see here. Oh, what's going on with these markets? I glanced at them real quick this morning, did the updates. Let's see if we can find something here. Oh, wait, and before we get into that, I'm going to show you here real quick DXY. So I told you, these things I pointed out here. This was that post I showed you. Both starting with bullish divergence at the bottom there. Both making the same general kind of movement here. Both making the move out. This one looks a little bit more closed. So, you got this, and then back. That looks to be similar to this right here. So, if it continues following on, I think we kind of look at this right here. What's going on here. We'll just kind of put that in yellow or something. I think we can kind of put that with what we're seeing right here. Right there. And so if that's meant to continue happening there, well, then we're going to have we should expect to have what we have here. And if we did, that should take us to a new high here. Now, the importance of that new high is that now we've got, you can look and go 1, 2, 3, 4, 5. So even if you want to count as a 1, 2, 1, 2, or just a 1, 2, 3, 4, 5 is leading diagonal or something. The fact is you've got 3 waves up. Or I'm sorry, 5 waves up. Up, down, up, down, up. And that's the minimum of what we need to be bullish. But really, again, what we need to really happen is the move up here above this high up here at right up here at just about 95. There we go, right up here. 94.7 or something like that. Because this is, with my count, this is that large wave 4. So if we get up above that, that should close off wave 5 here. And it should say, okay, we're probably 5 waves down and done and headed up at that point. For right now, locally, we definitely need to head on up there. But for now, I mean, it's looking like it's following the pattern pretty well. So we'll want to see it get up there. As long as it remains below this swing high at least, there's still a strong possibility. You know, price is still really susceptible to heading lower below the January low here. But let's look at it this way. If this is, I don't know. If I was to look at this and go maybe ABC here, I would say maybe we've got a 1, 2, 3, and we're working on a 4 here, and then we'll have 5 down, which should get us a little bit lower here, take us to the swing lows. And so just a quick look at how this might play out in a count. Let's see here. Again, we're just doing a lot of guesstimating here based on where we're at. Now, if it follows the full stretch like it normally does, you know, this would be your wave 1 overall here, maybe wave 2, wave 3, wave 4, and wave 5 right there around 88. But you know, again, we are noting a lot of rotation going on here from you know, shorting to longing. So we could end up seeing an ending diagonal here. We could see something that ends up looking more like this here. And so that gets you right here just a little bit below. You know, the below here is about 89.2. You can maybe get there about 89.5 maybe even, and you can get something, you know, again, more along the lines of this. And by the way, if this is ABC, if this is an ending diagonal, it has to be an ABC. So we've got ABC, so that would make this wave 1. And this would probably be an A, a B, and then we get a 2 up here, so maybe we'd have this potentially rising up here a bit more. Still pretty much the same area here. Still get you in this cluster right here, this cluster right here. See? And so from that point, you know, you would get your 3. Kind of pull this up here a little bit. And instead of reaching the 1618 here, you know, you might just reach something like about this swing low here, this previous swing low. And then your 4 is going to pop back up into your 1. And that'll give you a 5 that pops just a bit lower. And you can actually see that around 89 or so. Definitely a possibility based on the amount of rotation we've got going on right here, if that were to come down. But again, fully pulling out there, you know, have that bit further down there at 88. And of course, the other side of that is that you can have an overextension, one last final thrust down, you know, with wave 3 and or 5. And you can get that to Hank's targets there in the mid 80s, you know, 85, 84, something like that. But you know, you have to be aware that when this does rise up, you're going to get the negative effect on the other markets there, including Bitcoin. So, you know, it's not going to be a 1-for-1. Not the second, you know, DXY moves, you know, Bitcoin and other markets are going to move the opposite. But overall, you know, you're looking at that movement there on the possibilities. But again, if this pushes up here above this swing high, excuse me, follow through kind of this thing here. 1, 2, 3, 4, 5 waves up. And that's the first part of what you're looking for. Usually for a reversal, you're looking for 5 waves up, 3 waves back, 5 more waves up. Minimum. And something like that here, with this happening, which should take it above the 95, which again just increases the confidence in the bottom potentially being in here. But until we get all that, guys, still susceptible to coming down lower there. Let's see here. The DXY, can we also start wave 1 at the start of 2021? Start at the bottom? Yeah, this is where it starts. Yeah. This is what we're looking at. Right now, my count has this as potentially a 1, 2, 1, 2. But I can also see the 1, 2, 3, 4 as the leading diagonal. Because you can get maybe like an A, B, C as a 1, 2. And you get an A, B, C as a 3, 4. And you get an A, B, C up here as a 5. And so you'll have it looking kind of like probably like this right here, if it was to be bullish here. And you'll get it a little bit up here for 1, and then it'll pull back, and it should pull back toward this kind of range right here. So again, if this was to be a an ABC as a 1, and then a 2, ABC as a 3, and then a 4, and then ABC as a 5 up here, you're only getting that pullback down here toward, how far is that going to be? 38.2 to 50%, which is what often happens in a diagonal, because you have your wave 2 and your wave 4 kind of in that same area, providing a lot of support. And so again, looking at something like that, your next move out, and again, I'm just guesstimating here real quick, guys, but you can look for a wave 3 up here at 94.884. That almost takes you right there above this this swing, this wave 4 here, which is what you're looking for. Gives you a minimum wave 5 at almost 96. So yeah. No worry, man, no worries. But yeah, that's how I would see this. I mean, I think that actually makes a really good possibility here, because you've got so much convolutedness, so much overlap here, that I could definitely see this working here as a let me do this here. Oh, I can't get it. All right, it's going to make me wait here to do it. Okay. I can see this, again, as an A, a B, and a C as a 1. C as a 2, and then an A, B, C as a 3. A, B, C as a 4. And you get some kind of A, B coming on the top here, C as your 5 there. I just want to change this out here a little bit. There we go. A little bit thicker for you guys to see there better. But yeah, you would see that, that leading diagonal, 1, 2, 3, 4, 5. The pullback down to this area right here where you've got all the support, move up. But we got to get above, again, we've got to get going up here. We've got to, follow potentially the same movement here. As it kind of moves up there. We don't have to follow the same move, but I'm saying it's it's making a good case for potentially following the same one up there. Let me see here. As far as the other charts here, let's get this over here. We've got potential higher up here. We've got, until it advances above the current high, there's still a possibility that this count is valid here, but I'm kind of leaning toward this move for a 5 up here, at least to the R1 pivot right around 13,835. That gets you pretty close to a 13.9. So if this count is correct here, if we've got a 1, 2, 3, 4 here, then price cannot go above 13.9, because if it goes above 13.9, then wave 3 would be shorter than wave 1 and shorter than wave 5, and you can't do that. Wave 3 can never be the shortest of those 3 waves. It can be the largest or it can be the middle, but it cannot be the shortest. So with this current count I've got low going on locally here, price would have to reverse prior to 13.9. If it goes above there, we have to look at the count differently again. Maybe we have an overextension of wave 3 then, or something like that. So we would look at that. But, overall, you can see that RSI continues to drop off here. This is the 1 hour, 4 hour, We're up here and overbought again. RSI showing bearish divergence here. You can see what's kind of going on there. Got some good gaps left open there. Gaps are easy to fall through. Here, not even the gap here, but just this all straight down. There's no real support in this area on the 4-hour. So if you're dropping below the pivot here, there is no reason you shouldn't be thinking that you're going to get right into this 12,900 to 13,000 kind of area. This should be an easy drop right here. So in terms of where we are, that could potentially be a 1, 2. That would be a 3, 4, and then a 5. You get you move back up, probably toward this 13,500 area here. You go down, and that may end up printing a head and shoulders pattern there, which then just kind of gets you back down here toward this 12,300 kind of level, 12,200. But that's the NASDAQ right there as far as that one's going. Let's see here. The S&P E-minis. Man, the proximity to the invalidation level here. I've got this count here that says, okay, maybe we're done and we've got a 1, 2. And this would potentially be a 1, A, B, C as a 2. But that proximity of this to this and then this current one to this, it has me leaning toward a higher high, kind of in line with the NASDAQ. So we'd have to readjust this count. But we'd look up here around 39.43 right now as an initial target. Potentially higher. That gets you pretty close to 4,000. So it might, the magnet effect, the round numbers might pull you to 4,000 area. But as long as it remains below this 39.20 and 50 cents here, the count remains valid. And we'll look for the move down toward 38.50, 38.30, right around there. Excuse me. At least. But if this is, if this is a 1, 2 and this ends up being a 1, 2 here, this wave 3 is going to be lower, probably closer to 3,800. Maybe even lower than that as this plays out. Let me see here. Yeah, the VIX is making some music there as well, so watch that. When the VIX pops, you're going to see the stock market drop. That's the usual way that we look at it. Let's see here. Gold. Gold right now, I do have 2 counts I'm looking at potentially. Right now, my main count is this red count, which has this as a 1, 2, and potentially working on a 3 down here around 1691.80. But if we get the move up above the 2 here, in that situation, we could be looking at least 1885 or so, 1890 at least. Probably closer to up here around this area up here at around 1920 or so. I can give you like again, this would be an an ABC is A, ABC is B, and then 1, 2, 3, 4, 5 is C. Then come down. The count's valid as long as price does not get above this way up here at 1961. If you get above 1961, then we can talk about a more bullish look. But even at that point, I think you're only doing a wave 5 at that point, which means, again, I think we had targets of around potentially 23,000 maybe. 2,300. Jeez, 23,000. 2,300 if it does do something like that. But again, until it gets up there, your buy should be to the downside. I think overall, the structure's there. Let's see here. Do I see a good pump this weekend for what? You guys got to, sorry guys, you got to be a little bit more specific, just in general, but also because, I tend to speak a little bit and then I look and read and I want to make sure I'm correct, understanding what you're talking about because I do my best to answer your questions. Let me see here. So that's kind of what we're looking there with gold. We had last night, one of the chart requests I did last night was New Zealand dollar against the USD. I did it. We were right about up here. And I drew in, I labeled this as this. Pretty accurate. Wave 3 here. Almost hit it. Wave 4, right there where we had it. Wave 5, right there we were looking at. So it worked really well. Came out real well. Couch seems to be working at the moment. So, right now looking at this, that's a lot of straight movement up there. I can't really see a... let me see. Let me zoom in a little bit here. There's no real movement down in that. 1, 2, 3, 4, 5. I think it would be an A and a B here. We'd have to have a C up. So if this really can't go any higher, though. It can't go higher than this 2 here. So the possibility would then be that this... All right, so the possibility here, if this, because this is pretty straight up here. This is, we counted 5 up. So I could see the possibility that maybe this is something like this here. So you get an A, B, C up here as an A. And then you get an A, B, 1, 2, 3, 4, 5 as a C. So there's your B. And then you have your 5 up here for your C. And it's just an expanded flat for wave 2. I think that's the way that's going to have to be. You're 2 straight up here. You've got your 5 count. I think if this is going to continue to be a bearish structure here, I think this has to be an expanded flat. If it continues going up, through that, I think this potentially just becomes maybe an A, a B, and a C here. And then we've got, your 5th wave still to go. And if this happens, if the New Zealand dollar here was to go up against the USD and do another wave up, we can pretty much, I don't know. I was going to say we can expect the dollar to go down into a lower wave, but the New Zealand dollar is pretty close. And it's not even one of the things we have to worry about. Never mind, I'm not going to say that. But yeah, so it could be, a 5th wave start here as a 1, 2, 3, 4, 5. But I think in order for this to remain as a bearish count off the top here, I think you've got a 1 here, and then you've got this expanded flat. There's your 2 here, maybe. Maybe. And then you have some further movement down. The only other way that could be... let's see here. Let me zoom back out here a bit. The only other way that I think this would maybe work here is if you can get some other 5 count down here. And I think the way you would have to do this, I think you'd have a, excuse me. I don't even know how you do it. 1, 2, and then a 1, 2, 3, 4. And you have to get below this for a 5 for 3, and then you have a small 4 and a small 5 maybe. But that's kind of ugly. The only other way would be maybe like a 1, 2, 3, 4, 5 within this wave 3 here. And then it gets you there like that. But I think it's right now we just watch this bigger term thing. Does it reverse here and head down? I mean, if you look at the 1 hour, we're an overbought, trying to cross bearishly and curl down here and stoke RSI. So definitely some possibility in that. Strong move up. Again, as I talked about, no real support, so you could see a move coming back down here pretty easily. You had it here. Had a strong move here. Strong move here. All in this same area. So I think, again, you drop back below this swing high here, this wave 4, and I think it kind of sets you up for further downside with that. But I don't know how you get maybe an ABC out of this here. Maybe. No. I was going to say maybe we could have a leading diagonal here, but you've got no real overlap between wave 4 and what would be wave 2 here. You could do like an ABC as a 1, and then a 2, ABC as a 3, and then a 4, ABC as a 5, but that doesn't work. Yeah, no. Yeah, I think it's got to be what I was talking about there as far as the other way in order for it to go. But nonetheless, the targets hit perfectly, pretty perfectly there. So that was one of the hot takes we did last night for Tier 3. Turned out really well. It's great to see that. Gonna bring this back to Bitcoin here. Bitcoin's showing some supply coming in there, trying to find some support on that 15-minute pivot. You know, we've got the dip here. We've got the dip here. I think if you lose that pivot, you're going to lose both these, and you're going to head down on the short time frame, at least toward this S1 pivot area around 45,100 area, I think, at least. Potentially down here toward 44.6. So kind of that range. Yeah. In there. Let me see here. Hot just reached an all-time high versus the dollar. Hot, are you talking about hollow coin or are you talking about hydro coin? What are you talking about there? Do I see a pump? Oh, just for crypto in general, Bernardo? This weekend? I think it's possible, but again, I think right now we're just stuck sideways right here to really call it. I think it's definitely possible. So you want to watch that swing high right there, that 49,000 here on Bitstamp. But I could just as easily see a dump down through toward these levels here. Especially with this structure the way it is, this larger structure. You're usually looking for that pullback, you know, at least to the top, if not interior, to kind of get some confirmation of some sort of, like I said, essentially would be a higher low. You know, your LPS if it's coming down here, your last point of support. If we get the pop here and back up, again, that means, you know, we've got a shorter wave B here. We have wave C, we've got wave D, and then we got wave E there, you know, and so what you get here is this back up the edge of the creek. You know, this back up here is what you'd be seeing on that signal that this is done and headed up. But that also gives you a short wave, you know, a short phase B, which means it's got some strength of movement, but nowhere near as much it would have if this is all your wave B here. Much, much greater. All this extra in here that you could have as far as building that cause to make price rise if it's reaccumulation. Yeah. But again, I don't think there's enough information going in here right now to say with any real confidence whether we're going to get a pump or a potential dump down this weekend. You know, I think it makes more sense to get some kind of dump and to pull back. But again, there's not enough here for me to say, yeah, I think it's definitely what we're going to do. I think you just let these areas work themselves out. You watch your levels, and you trade according to those levels, those bigger levels there. A lot of you guys are new traders, you know, and you want to trade short time frames. I'm going to tell you what, you're doing yourself no favors by trading short time frames. The newer you are, the larger your time frame you should be trading. Guys, I've done this before. I want you to understand something. As a trader, this is what it's going to look like, okay? From when you start to when you get better. That means you should be prepared to understand that when you first start in the market, you're going to lose money. This is why risk management is so important. You want to be able to survive this. You want to be able to, especially, to survive this right here. So as you start being more consistent with your profits and you're working your stop loss even better, you know, you've got money to still put into it. Remember, I always talk to you guys about rule number 1 is to protect your capital. Rule number 2 is to grow it. Why? Because if you can't protect it, if you can't keep your capital from drawdowns, then you're not going to have any money to make money with when it comes time to do it. Most retail traders will lose their money. Like right now, we've got this move up, right? Everybody's a genius when price is doing this, okay? Most traders will make some money in here on the advance, and then they'll give it all back, and often even more by the time it's here, and then they won't have anything left to ride the next one up because they're trying to play the short time frames. They're not experienced enough. You guys have to be honest with yourselves about your lack of experience in the markets, guys. When somebody like me starts talking about greater macro events and what's going on, I'm pointing out those TikTok things and the celebrities coming in, and comparing that to previous times before. I mean, guys, you don't have to just right off and say, oh, blindly believe me. I don't ever want you to blindly believe anything I say. Everybody else wants you to blindly believe them. Don't do that with me. But what I want you to do is I want you to have an open mind and the realization that you may not know what's going on like you think you do. It's easy to lie to ourselves. You don't want to do that, guys. Because then you're going to continue making the same mistakes you're making and losing money that you don't have to lose. Right? Nobody wants to do that. By the way, there's your tap right there. I talked to Discord about this last night in the BMA video update. About this little guy right here and how it could provide a bounce. That's what we got. We've still got lower highs though. Watch out if we lose that. That should take you into here. You might get a small bounce in this area. So you might see something, like a bounce here, getting you down here maybe. Something like that. So just continue watching that as you're trading there. Let me see here. Let me see. Vad, what's going on? You're saying I can't tell if that's an L or an I. I'm sorry with the last part of the part there, so I'll just call you Vad, V-A-D. Let's see. May you share a chart that will take advantage on the near future. I think it will do ADA move. Thank you for being a good human being. For all who think on tier 3 it's worth all the money. Well, I appreciate that. Thank you. Yeah, if you want to, I don't know if you can share a chart. You just have to put spaces between the dots, and you'll have to give it to me pretty quick here because I'm about to be done. But yeah, if you can do that, we'll take a look at that for sure. We'll take a look at that real quick. By the way, guys, hey, don't forget, next week we're going to start just live streaming here publicly twice a week. We're going to do it on Tuesdays and Fridays, I think. Yeah, Tuesdays and Fridays. But we're going to do like we're doing right now, both days. So we can take some requests. We'll look at the different, the various markets and see how they're doing, not just Bitcoin and the dollar. And like I said, we can take some requests on that as well. And then that'll allow me to be able to spend more time with our members over in Discord, because they're paying. I mean, it is what it is. But it also allows you guys to get a greater feel for the market twice a week rather than just really at the end of the week. So make sure you do that. Live trading. We're still working on everything, guys. Right now, I'm trying to get all the commitments I have with TWC, all the the updates and the chart requests and all those things into some kind of manageable form, because we've got a lot more members. We're starting to get more and more members, and so I'm trying to get that in more of a manageable form, which is why we're doing all the changes that we're doing, which actually ends up benefiting you. But we'll see what we can do about that. We're still trying to work on how we can potentially do that. Some way maybe. I don't know. Live trading is always really kind of I don't know, really, is it a misnomer? Unless you're looking at scalping, and scalping's, I really don't want our members scalping on short time frames like that, 5-minute time frames or something, because it's so easy to lose your money, without the risk management. But, we'll see what we can do with that. Hey there, Crypto Girl. Good to see you. Good to see you. Let me kind of catch up here. Yeah, Vad, you got to put in the link without the dots between it. So like we have howtotradetowin.com. We'd have to put a space between that instead of the dot between the howtotradetowin and com. We'll see that. Let's see here. I'll give it a minute here. See if you can get that to me. If not, we can try and do that next Tuesday then. Or, of course, you can share it with me in Discord there, and I can talk about it there for sure. Yeah, Tell You Rider says definitely scalping going on in the Bitcoin TA channel if Bitcoin scalps are your thing. You can sign up for Tier 1 and then jump. Man, guys, we have got such great traders, man. I'll tell you what. It's absolutely beautiful seeing them all interact so well. And, and what you're going to find, again, guys, I want you to understand something. Before I go here, listen. what we do at TWC, we do different than most people. And I think it shows in the fact that our members tend to stay with us quite a while, on average, well over a year. And I think that benefits new traders who come in because they have people who have built this camaraderie and this understanding and these reputations for how they trade. And so you're able, and of course the kindness, man. I mean, if you're a new trader, you come in there and you ask a question, man, you got so many great people in there who are willing to give you really good answers, like answers that I'm fine with. They're the real answers. They're not just, oh, somebody's pulling something out of their rear end or something. The only thing we don't allow, guys, if you want to join, is we don't allow a lot of hyping of nonsense. If you think something's going to do good, that's fine. We want you to mention it in the appropriate channel. But give us real reasons for it, not just like, oh, so-and-so's going to the moon, jump on or you're a loser. Stuff like that, guys, we will remove those posts. We're going to warn you. And if that becomes an issue, we will kick you, and you're not going to get a refund. And again, I think this policy that we do with here works really well because, again, our members tend to stay with us for a significant period of time, and you don't see that in most places, guys. So be sure to check that out, all right? NASA's going to the moon. But anyway, okay, guys, so there we go. That's it. Again, you can trade it. You can join us over here at howtotradetowin.com. Just scroll on down the page. You scroll down the page there, and you can get down here to what we do, our tiers, and what's involved. If it's red, it's not included in it. If it's green, it's included in that tier. These are if you're paying month to month. If you get more than 1 month at a time, if you buy a quarterly or a biannual or an annual package, membership package, these get significantly cheaper. Your average monthly cost gets significantly cheaper because we're firm believers in you're not going to learn to trade overnight. So if you make that commitment to be with us, I believe that what we teach you is going to be very significant in that you are going to be a much better trader when you leave if you're open to learning and to doing. If you want to show us that you're that serious by taking on more months, we're willing to give you a heck of a cut on it. By the way, we're trying to update some of this. We've got well over 50, 60 hours probably of educational video content now. As I said here, more on the way with our updates. I mentioned earlier today at the beginning of the stream there that we have the crypto indexes that we'll be adding starting today. If you're tier 3, you're going to see them. We've got a grouping called crypto indexes, and the channels are the alt perp, DeFi perp, exchange perp, mid perp, and shit perp. And so those indexes will be updated. Like I said, starting weekly right now, but within a few weeks, we should have it down at least twice a week. If I can get it in 3 times a week, I'll definitely be doing that. But just, again, more information to help you hopefully find better trades out there. So just come on there, click on that, and you'll get set up there, guys. By the way, when you first log in, it's not just what's on the website here. We've got a ton of stuff in Discord. So when you first log in on your account page, right here to the top, you'll have a list of links down here on the left side. At the top, it says log on to the TWC server or whatever it says there. Click on that. That'll get you on the server here. And soon we're going to be automated. Like I said, hopefully that'll happen here in the next few days. But if you do it before then, we keep up with the new members and we look for you to join the server, and then Adam will contact you and say hi, and we'll get you set up with your account privileges there on Discord so you can access all the channels we got on there. We've got more content in tier 3, guys, than you guys can absorb in a month. I'm going to tell you that right now. So something for everybody. But you guys have a great weekend. Thanks so much for being a part of this and joining me today. Like I said, I'll be back on Tuesday of next week at 11 a.m. Central Standard Time. We'll do the same thing we're doing today, and then we'll do it again on Friday, and we'll just do the Tuesday, Friday thing. All right, guys? Follow me on TX West Capital on Twitter. Join us on Discord. We'd love to have you. Other than that, y'all have a safe weekend. And remember, the only thing you control in the market is how much you lose. That's it. Have a great weekend, everybody. Trade safe. Take care.